Hello, everyone. Welcome to Binary Index Trading. My name is Tom Nowakowski. I will be your host tonight, and with me is our guest speaker, Josh Cavarella, the CEO of Markets and You. Josh?
Hi. I'll just introduce myself properly. My name is Josh Cavallaro. I was born and raised in Australia, Queensland. I'm the CEO and founder of Markets and You, leading index trading company. Markets and You sends binary index trading signals out to clients all around the world. We've been trading the binary trading for over 7 years now.
Tom, do you want to? Sure. A few words about myself, and we'll proceed on to the subject matter. I've been a fund manager for the last 15 years. I've worked both in the United States and Europe, and currently I'm working in Australia for Markets and You as a senior strategist. My experience comes from the derivatives industry. I've worked for several fund management institutions, trading foreign exchange options, as well as future contracts. What I'd like to share with you tonight is some of the techniques that are used in institutions that we use currently in order to produce clear and concise trading signal and to deliver profit-making opportunities to our clients. So let's get into it. I'm going to cover just briefly what, for those participants who are new to binary trading, just a few simple matters about the binary index and the binary trading market. Next, we'll talk about why, in particular, we prefer the binary indices and some of the advantages of trading binary options on indices. And then we'll get into it specifically on how we spot trading opportunities and some of the techniques that we use to identify trades. And we'll go on to the very important part, I feel, which is the emotional trading, which is analyzing the emotional components in the markets and the key drivers behind market movements, which are essentially emotions of fear and greed. Lastly, we'll look at the market sentiment and how we read the market sentiment in the market in order to forecast market movements. All right, going on to the next slide. What is binary trading? What's important about binary trading is that it's a very simplified form of trading. All we need to forecast is just the direction of the market. The depth of the market movement does not matter. And to give you an idea, if we take a traditional market like the stock market, we would actually need quite a bit of movement to be profitable. So, for example, if company X shares trade at $10 a share, and the market goes up by $1, well, we just made $1. If it goes up to $15, we make $5, and after it goes up to 20, 10, and so on. But we need quite a bit of movement, quite a bit of depth in order to be profitable. Not so in binary trading. All we need to do is forecast just the direction. We are not concerned with the depth. So if the market moves by a tick, by 10 ticks, by 100 ticks, the result is the same. If we forecast it correctly, we're able to make a profit. So therefore, the trading is actually quite simple because it involves just that one element, which is the direction of the market. We don't involve the depth. We don't have to wait for the market to make a large movement. We're able to actually make money on very small moves, which brings me to position 2 in this particular slide. Sizable profits can be realized with small moves. Any move will do. So this is exactly what I just covered. Again, we're able to make a profit just with the smallest movements. We don't need to wait a lot. We don't need a lot of depth of movement in the market. What that provides is our opportunities to actually jump in and make several trades within short periods of time. If we have a single movement, which takes us through, let's say, upwards for the next 1 or 2 hours, we're actually able to place 10-minute trades, even as well as 5-minute trades. We're able to place several trades on a single market movement. And again, we like that because we're able to actually produce a lot of successful trading signals and profit several times because again, we don't depend on the market on the depth of the movement. We don't actually have to wait for the market, as in the traditional market, to go from 10 to 15 or 10 to 20. We're able to profit from when it goes from 10 to 11, 11 to 12, 12 to 13, and so on. We're able to be successful several times during that same time period. Lastly, one other thing which I like about indices trading is the fact that we actually trade on on information which is widely disseminated. This is international news. The news that is readily available on your TV in international channels. This is news that comes out in newspapers, that's available on the internet. Essentially, we're talking about general economic news. So what happens in the country, a political statement, data release by a central bank, growth. These are all public. This is all public information. It's a very lucid information, and it's out there. It's easily retrieved. And just to compare that to the traditional market, say if we're trading on a particular company share, well, we don't have all the information. We don't know everything that goes on inside that company. Some of the information by legislature is required to be provided by companies that are publicly traded, but they only provide as much information as required. And again, not so on trading indices. What happens is essentially the market moves on the general economic health of that particular region. Josh, did you want to add anything about diversity or of trading indices versus companies?
One of the main key things that I like about trading indices is the fact that an indice or a country index is made up of, for example, the Australian ASX is made up of 200 of Australia's top competing companies. And the beauty about this is it creates stability in the market. For example, when we see trend lines happening in an indice market, they tend to trend for a longer period of time than your normal markets, like your Forex or to traditionally buy stocks, like buying a Google stock or something like that. So there's a lot more stability in trading indices, especially when you're picking, forecasting a move for an indice market. You tend to get a lot more direction and therefore can profit a lot more from that.
Yeah, I agree with that very much. And again, just to recap, when we're trading a particular company stock, again, we don't have access to all the information, and the movements can be erratic. There can be surprises. Whereas if we're trading indices, that company-specific risk is diversified among all the companies that are involved in the index. And again, to conclude with the information that moves the market, again, it's out there. It's widely available. There's nothing hidden. Therefore, there's less surprises, and it makes that particular market more predictable. There's no surprise news. Lastly, moving on, the last reason why I, in particular, like trading indices is because there are leading indicators. And what I mean by that is all the markets around the world are somewhat linked to each other, and they influence each other. Very much like magnets, they push and pull. To give an example, if a major index, such as that of the United States, has a strong move, let's say upwards, and Australian markets closed at the time, we can, with reasonable chance, forecast that the Australian market will open on an up note. So essentially, if there's strong movement out there, that is a leading indicator as to in which direction the move will open in a market like Australia. So the fact that we can actually have these signals, it gives us the ability to make correct forecasts a lot easier than it would be with any particular single company stock or any particular commodity. Again, indices are a lot more lucid, a lot more readable.
I think, yeah.
Okay, that would pretty much conclude why we favor indices. Lastly, last slide on it. One important fact that you need to add about trading binary options in general, and in particular indices as well, is the fact that we can make money in any direction, as in we make money if the market goes up, and we also make money when the market goes down. This is probably widely known to some of the more experienced traders, but again, in traditional markets, most of the public makes money in general when the market goes up. In binary indices, all we need to do, again, is to forecast whether the move is up or down, and we make money both ways. That's quite important because it gives us a lot more trading opportunities. We're able to place a lot more trades, and therefore we're able to generate a lot more money using this particular style of trading. Okay, and something else that's quite important is that binary.com does cover most of the major indices all over the world. What that means to you is that no matter which part of the world you live in, all you need is internet and a laptop and our own trading signal to aid you, and that would increase your opportunity to make money. That would increase your profitability rate. And again, I'll just add to that. It'll also give you peace of mind, making trading fun. Having a signal service like Markets and You takes a lot of stress out of the trading experience. So rather than sitting there worrying about whether you've made the right decision or not, you can sit back and know that trading signal that's been sent to you has had hours and hours of analytical data been processed by many different people, not just yourself. So there's a lot of peace of mind in incorporating our service as well as binary.com trading anywhere around the world. So I'd just like to add that in there. Yeah, correct. So basically, the trading indices is really for anyone, anywhere, with access to internet. And there's a lot of choices for time zones, so I'm sure that everyone can find the time zone of their choice and to place trades in. Okay, so let's move on to the next slide. We're going to be talking about trading techniques and some of the techniques that we use to forecast the market, and we'll be able to present why we are a lot more successful in trading than an average retail trader. And again, maybe at this point I'll point out that with a sense of pride that our success rate is over 85%. And we've kept that consistently over the last 7 years.
Yeah, that's right. So I'm just going to talk to you about a couple of different trading technical styles that we use in Markets and You. The first one I'll start with is the doubling technique. For those of you who don't know what a doubling technique is, it's fairly self-explanatory. What we do is we double our profits on our second trade to cover the losses of our first trade. To give you an example of why doubling technique is hugely advantageous, for binary style of trading. If you take I'm not sure if you can see my pointer here. Just going to try something. Yeah, everyone can see my pointer. So at the bottom of this Bollinger line here, if you look at this chart, you can see we've had an opening candle move that's pushed through the bottom of the Bollinger line. Now, this is an indication of a reversal or at least a correctional move. Now, following that candle, we also have a confirmation candle of that move. Now, this setup would promote most traders to act on this formation. Now, if we were to place our next trade for a rise, as you can see from the next candle, we would have lost that trade. However, using the doubling technique, you can see that the forecast was correct. We were just a little bit behind
on time.
Yeah, on time. So by using the doubling technique, it allows us to have a second chance in that trade, and often can turn the outcome to be a successful.
And the second, I just add to doubling. Essentially, it gives you a second life. What happens here is often we forecast the right movement. The other part of the trick is actually getting the timing right. So essentially, what the doubling technique does is allows us a wider range of time in which to have a successful trade.
Mm-hmm.
So essentially what we're doing is we're extending the time on a particular move that we forecasted.
Mm.
Yeah.
So the next thing I'll talk to you about is range trading. For those of you who don't know what range trading is basically a market that doesn't particularly have an upward or downward trend. It's basically moving between Bollinger Bands or moving averages and stuff like that. So the beauty about trading on a range trading market is that we're able to send out many trades, short-term trades, quickly on a range trading market. It doesn't necessarily happen quite often, but when it does happen, we do take advantage of it. And it's important to note that in trading, it's always good to take advantage of every opportunity that presents itself.
I could jump in for a second.
Yeah, sure.
Just to visually give you some information. If you can see my pointer, this is a pretty flat market in terms of just it's not going up or down, so that's it's obviously trending within the channel. What we're looking at here is a Bollinger Band in the blue. Obviously here the market has bounced off the Bollinger Band as expected. It has come up, and next it bumps up into the ceiling, which is the other Bollinger Band. It bounces up, back down as forecasted, and it bounces again over here up. So this is quite a predictable market. It's quite consistent and provides for a lot of trading opportunities.
Okay. Lastly, I'll touch on the technical charting side of things. I won't go too much into this because I could talk all day about the technical aspects of reading a chart. But one of the key things that I want to point out with binary trading and the technical side of it is that your key indicators, like for example your RSI, your MACD, your volume, even the Fibonacci levels are very, very accurate, especially on an hourly format, which is again very beneficial in binary trading, and allows us to send multiple signals whenever the opportunity presents itself. That's pretty much all I really want to touch base on that.
Okay.
So Tom's going to go into the mixed market environment,
Sure.
and also a trending market environment.
So what I'd like to do is present maybe two more techniques that we use to forecast the market movements. One of them is called mixed market, and what that does is if you have a look at the top picture there, you can see that in general the market is slightly up. If we look at the euro on top, the third position down, if we look at the French index, they seem to be slightly up, and then we see an aberration. The German market is quite a bit up, out of range, and statistically far past the mean of the other markets. So the German market is 2% up, whereas looking at the next one, it's only the Irish one is 0.79, the Italian is 0.09. So there's just a slight trend. So the German, as we can see, is deviating from the median trend, as well as if we look at the Belgian index, that is down of over 1%, which again is not consistent with the general market trend. So this also gives us a clue that this is statistically deviating from the mean. And what that means is that, as I mentioned before, the markets tend to influence each other. So they're going to be gravitating towards the middle. They're going to be gravitating towards an average number. So if there's a particular market that is shooting way off the average, what that means is going to soon be trending towards the average. It should be a reversal at some point soon. So these are, again, opportunities. So to give you an exact example, what we would do is we would place a trade for a fall of the German index, which is right now at 2%, but obviously should be coming down to a lot lesser number to be more consistent with the general economic trend and the general movement of the market. And the same thing for the Belgian. We would actually place a rise on the Belgian market, which should come up and just reflect more what the other markets are doing. This is in particular true in Europe, where the economies are quite a bit linked, so they tend to move a lot more in synchronicity to each other.
I 100% agree. Yeah.
So that's a technique of the mixed market spotting for opportunities which are significantly deviating from the median. And as far as the next technique that we use, the trending market, as you can see here on the picture on the bottom, there's quite a bit of red candles, a few green ones, and a red again. So this is a trending market. This provides a lot of opportunities because what we would do is we would place several short-term trades to take advantage of that movement. And we obviously go with the trend. There is a proverb in the trading world, and that trend is your friend. And so generally we would go with the trend. And again, using the binary trading style, we would be able to place a trade conceivably with every one of these candles and have several trades, successful trades. So when we actually identify a trending market, that provides for a lot of opportunities as well. It's quite easy just to go along with the trend. Okay, and then to wrap up the trading techniques, what I wanted to point out to you is that, again, to summarize, a lot of the times the markets will, using technical trading markets, will actually bounce off the resistance lines over here. You can see a bounce into a piercing through confirmation candle that the movement is exhausted. This green movement here is exhausted, with this red candle confirming that reversal has started. It's then continuing down as predicted. So basically, when the market hits its ceiling, which this is again Bollinger line, a reversal is forecasted, and that's obviously a bounce, and that's something that we talked about a little bit earlier. But again, this is very vividly seen here. Something else that we look for is the exhaustion of a movement. And what happens generally is if a news is released into the market, such as economic data, growth, inflation rates, things like that, the market's going to react. And initially, it's going to react very quickly. So you're going to see initially a very strong movement that over time is slowing down. So essentially, just imagine something accelerating, and then without additional impact, it's just going to be slowing down, essentially. So what we look for is a market that has reacted. It's actually consuming the news. It's validating itself, and it's exhausted. And at some point, that news would have been consumed, and the market would have reached a certain level. Generally, it overshoots itself, so we will be looking for a corrective bounce. So once a movement is exhausting itself, we would see the candles. Let's say this is probably one possible example: is markets trending down. The candles you can see here the red candles are getting smaller. We've seen a green. This is kind of a reversal. And we have identified essentially that a move has been, the news has been consumed by the market, and the trend is reversing. It's going back up. So this is another important point. Lastly, something that we also mentioned before, when we see a trend, when we see any kind of short-term movements, whatever they are, we're able to place several trades by shortening the time frames, and we're able to fire off quite a few trades, a lot more trades than in any traditional market. Lastly, I've saved the very most important point: patience is golden. What that means is that we really take the time before we jump into the market. Entry point is a very, very important part of a trade. It's not just the exit, but it's entering the market at the right time. And therefore, patience, I call it patience is golden, because your entry point to a large degree determines the success of the trade. So before we do that, we actually wait for the ideal time. We look for confirmations, both technical and, as I'll talk about in a moment, about the market sentiment as well. And maybe Josh, you have anything to add as far as market entries or patience?
Yeah. What I'd like to add on this is that your entry and exit points in the market are extremely vital in binary style of trading. In your traditional style of trading, you're only really worried about your entry point, because at the end of the day, you look at your trade and you've either profited or you haven't. With a binary style trade, you have to predict the movement, and your contract that you're buying through binary or whichever provider you use, you're in the market for a specific amount of time. You don't get to choose when you want to leave. So your entry and exit points are the most important things to consider when you are placing a trade through binary style of trading.
Because timing is fixed.
Timing is fixed. I'd like to just point out that, and you know that is another reason why having a signal provider service backing your own decisions even is always helpful when
absolutely,
in making profits on that.
Sure. Yeah, and just to add to that, obviously, we do have a research team that works 24 hours a day. All they do is to analyze the markets. We have access to a lot of information channels, a lot of data feeds. Our job is to analyze the markets, and we have a team. So we have a lot more capacity than any individual trader to process information. We are in the business of generating signals and to make profitable trades. So we would just basically we're able to deliver that information a lot better just because of the capacity we have, just because of the commitment that we have towards analyzing the markets. That is our main business. Moving on, let's talk about emotions in trading. I feel that there's just not enough attention that's paid in that component of understanding the fear and greed that drive the market. You will find there's a lot of analysis out there which is technical analysis based on moving averages. There's a lot of charting techniques which are valid. However, there's another component in trading which is the emotion, and the primary drivers are fear and greed. Obviously, people place trades, and decisions for these trades are again driven by emotion. Therefore, if we had computers trading out there, then all the news would be analyzed. It would be correctly priced, and the market would actually be very, very accurate. But because there's people out there that don't have access to all the information, that trade on emotion, or they trend with in crowds. People tend to follow everybody else. So if there's a downwards movement, everyone jumps onto it. It's very too late at that point. But what I want to present here is the fact that these are the opportunities that give us enable us to make a profit, because the market overshoots itself. The market moves overly up or overly down.
I'll just jump in. The fact that fear and greed play a part in the financial markets provide opportunities for everyone to trade on. If these two elements were not in the markets and they were purely run computer generated, there would be no opportunities for anyone like us to jump in on. It's plain and simple. But the fact that the fear and greed elements are in there, the only way you can really tap into that source and work out what is driving the market, is it fear or is it greed, is purely and utterly experience. There is no other way you can buy or purchase, unless you're purchasing a signal, but there is no other way you can buy a book or any type of knowledge from someone to analyze that type of element in the market. It is purely developed over time and experience. Exactly right, and that's the two key points I think that you're trying to put across.
So just to recap that, so there's a lot of algorithms out there that are obviously based on mathematical calculations, but inherent to the markets are going to be two events: emotions, which cannot be accounted for by math, and two is there's going to be always chaos in the market by events which cannot be forecasted. So these events could be natural disasters such as an earthquake, tsunami, release of numbers, just events in the world which just happen, accidents, assassinations, things like that, which you just cannot account for because these are random. So reading the emotions and being able to read market sentiment really covers that area of the market which is driven by chaos, which is driven by means which are not calculable. And so we do pay particular attention because ultimately the fear and greed are the drivers that move the markets up and down. And we do make it a point to be able to read the market sentiment. And this, again, is only acquired through experience. You're only able to have a feel for that market by having traded for a long time, by having went through these emotions and being able to understand these drivers of the market. So that component is basically experience. I think experience and just being able to be aware of that component out there.
Yeah, that's right.
So lastly, in part, we've covered some of these points here. This will be, as far as the emotional parts, we just want to let you know that that particular component is something that we do offer. That particular component, emotional part, is part of the analysis that we do. So after we actually receive, we conclude what happens in the technical part, we do account for the emotional component to actually arrive at a trading signal and actually arrive at a recommendation.
And that's another, I will jump in. One of the key things to take into account when trading on the market, the stock market or binary or whatever you're doing is, if you don't have that experience in knowing what's going on in the emotional side of the market, what is driving the market, whether it's fear or greed, you are basically flipping a coin, and there's no really way around it. And well, there is a way around it, and that is to purchase a signal through a provider. And the beauty about having a service like the one that we offer is that not only can we supply support for our clients as they trade, and they gain a positive feeling about trading because they're having success while they're trading, they actually learn at the same time. So,
it's a positive
learning experience for them. So, rather than having the other scenario where some guy joins up, decides to, invest $5,000 or $10,000, blows the whole lot in 6 months' time, tells all his mates he hates the stock market, it's the worst decision he ever made. We can turn that situation around, whereas this guy is happy as Larry. He may not know everything, but he's making money and he's learning, and that's the key things that we're trying to deliver to our clients.
And just to conclude our presentation, what I wanted to add is the fact that there's two reasons to trade. One is for the game itself, and the other is for profit, for money. And essentially, what we provide is the profit element. By providing signal, essentially we provide clear and concise instructions to clients on how to make a profit. Essentially, we lucidly provide trading opportunities, and all they need to do is just enter itself. Just stay able to have fun, but by having some guidance in the marketplace, really increases your chance of success. And again, we have achieved above the 85% success trading rate. I'm not proud of it. So that comes to our conclusion. So we're.
I can see that we've got quite a few international people that have joined us for this webinar. Just wanted to say a special thanks to everyone who's watched and joined us. I also want to say thanks to Binary for hosting this event for us. A quick word about Binary. These guys are truly a leader in the industry of binary trading. They offer an extremely easy-to-use platform and some of the highest return rates I've ever seen in the market, which is why we're more than happy to work with these guys. If you've got any information, if you've got any questions that you would like to ask us, or if you'd like more information about anything you've heard throughout this presentation, please give us a call, send us an email. We'll now do a 5 to 10 minute Q&A. If you guys have any questions, me and Tom will do the best we can to answer them. So just, send them through that chat, and we'll we'll answer them best we can.
And to add my own concluding remarks, we're obviously in the business because our clients make a profit, and we also choose the platforms that allow our clients to make a profit, because it does take both the right trading opportunities and also the best payout. So ultimately, we are in the business because our clients make money. Obviously, if they wouldn't make money, we would be in a more difficult situation. So I just wanted to leave that with you. We're quite happy with the relationship that we have with Binary.com. We feel that that is the right platform for our clients, and we have an inherent interest for our clients to make money. So that's why we have chosen the best tools. We're now open for the question and answer session, and please go ahead and type that in, and we'll do our best to reply. Don't be shy.
Yeah, don't be shy. I guess another thing I'll add about Binary and our affiliation with them, the best part about giving our clients the ability to be able to make them money is that we using Binary.com, we can maximize the amount of money that they make due to the fact that Binary offer the highest returns on their investment I've seen in the market. So that's actually quite rewarding in itself.
All right. Going back to questions, what I want to say is, look, if you have additional questions or comments, feel free to contact us. We do have a special treat for those participants in today's webinar that contact us, and to find out exactly what the offer is, please contact us any way of your choosing. And with that, I believe we'll be concluding our presentation.
Yep.
Thank you very much, everyone, and
have a good evening and good night wherever you are.